Hey, what's going on, team? It's Ricky with TechBit Solutions. Due to today's market performance, I had to put on my little diamond hand tank top today. I hope that you guys enjoyed that 8% run. Everything is running up. We have TQQQ up 8%, Amazon, Apple, Microsoft up anywhere from 3 to 4%. It was a ridiculous day in the market. We have finally broken above previous resistance levels. But again, the concern that everyone is literally asking, and if you're not asking, then I would be scratching my head on why you're not concerned. Why is the market going up? I actually just watched this very interesting interview with Morgan Stanley's very own Christopher Toomey, and I thought it would be something worth sharing. So I'm actually going to play the video, so let me go ahead and get that ready. And I hope that you guys enjoy it. You guys can let me in the comment section if you agree or disagree with him. And I'll make sure that I pause and make some points along the way.
Toomey here at Post 9 with me today. I feel like we should cue that sound effect, like wah, 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 because that's like your view on the market. You've been cautious.
We've been cautious.
And you still are.
Yeah. I mean, look, I think when we last were here was after the FOMC meeting. Sentiment was horrible, and we were concerned about a bunch of different variables. One, economically, two, inflation, three, the Fed, and four, consumer confidence. And but the thing is we thought the market was oversold. And so one of the things that we thought we would want to do is take advantage of the fact that as the market recovered, we could use that as an opportunity to start taking down risk. And that's what we've been doing for the last couple of weeks.
Selling the rips.
Selling the rips, building out a cash position, based upon the fact that if you look at those fundamentals, they've only gotten worse, right? So if we started the year, global GDP was supposed to be at 6%. It's now sub 3%, right? We were getting the inflation number. Everybody was hoping inflation was going to peak. It hasn't peaked. And the move isn't necessarily moved from transitory. We're now looking at structural issues around inflation.
But the market went down a lot, right? I mean, didn't the market price in a lot of what you're talking about? I mean, it was expecting the fundamentals to get worse, which is why the S&P went down 20+%.
I think that's a great point that was being made.
Right. No, I mean, and that's where you had that PE multiple contract, right? And that leads you to the other side of the equation, which you really focused in on is earnings, right? So we're right in the heart of earnings. And earnings have actually been not as bad as everybody feared,
right,
which is part of the reason why we've gotten this lift.
So again, why is the market going up? Due to what was already factored in, earnings were not as bad as expected, which is why he believes that this is what is causing some of this buying pressure or the so-called rip.
Right? But in reality, if you look at cycles, right, and you look at the Fed over the last 40 years, every time they've raised rates and gone through a rate hike cycle, estimates have come down, right? 2022 estimates for earnings are up 15%. Next year, up 8%. We just don't think that's possible.
One thing in your view that I thought was really interesting is that you say hard landing or soft landing, either scenario, at least in the short term, isn't good for stocks.
Right.
How so?
So, I mean, if you have the soft landing, right, we still have to see earnings come down. So maybe they come down 5 or 10%. We still have a resilient balance sheet with regards to the consumer and with regards to corporate America. We're still in a situation where interest rates have been going up, but they're not out of control right now. So you get a 5 to 10% pullback, you get a multiple going back to where it should be, you could still see equities come down 10 or 15%. We get a hard landing, right?
Well, then all bets are off. You get a hard landing.
You're going from, 225, 228 on the S&P down to 195, right? That's going to be a big difference. You've got the PE contracting, and then you've got earnings coming down even more. You're seeing kind of a 20 to 25% pullback.
You're not believing that, speaking of pullbacks, you're not believing the drop in oil either is sustainable.
No, I mean, I think one of your other guests brought it up in the fact that, look, it's going to take time to get supply back into the system, right? I think the issue is you're in a situation where China has basically pulled back demand because of the zero COVID policy. They're reopening. Demand is going to increase. You've got this issue with regards to Russia and the Ukraine, and there's just not as much you can do with regards to meeting that demand.
Yeah, I mean, but if demand slows here because of recessionary fears, doesn't that affect the supply-demand equation in a classic economic way?
Well, the thing is if demand, you don't necessarily need growth to continue to move higher. Growth can stabilize and stay flat, and you're still in a situation where you still have strong demand for oil.
What is it intriguing to you now? We pumped you up and suggesting you run this highly successful and well thought of group. at Morgan Stanley. I mean, what are you doing right now? I know you said you're selling the RIP, so what's attractive to you to put money to work in?
Look, I think we want to be patient here. We don't necessarily want to be a rocking chair investor. We're moving back and forwards and going nowhere.
I think that's a really big thing, a very powerful thing that he said. I don't know if you ever catch yourself doing this, but I think a lot of beginner traders, you know, when giving that example of catching yourself going all in and then shorting and then all in and going and then going short, sometimes you put yourself in a rut where you're not really choosing a side. And then he better explains why the idea of staying cash, waiting for a pullback, and then going long makes more sense.
In a situation where we own a lot of good companies, we're hedged, we're in a situation where we've got a lot of income coming off of our portfolio and our alternative side of the business, but we don't necessarily need to be investing just to invest because everybody else is investing. If you look at what's happened today, right, you got a situation where you got a technology company that's laying off almost 30% of their workforce and the stock's up 30%. You've
Huge.
got a consumer staple company that has great earnings, but does it really need to be up 30%?
Exactly. Overreaction.
Obviously, something's going on in this market right now that isn't necessarily based upon fundamentals.
Let me ask you lastly before I let you go. What gets you more bullish? Like, what's that signal you're looking for? Is it really firmly for a Fed to pivot? Is it a definitive sign that inflation is coming down? Is it no hard landing? Is that the kinds of things you're looking for?
I mean, honestly, it's about price. I think what we need to do is come to a realization that earnings are going to come down. If you look at earnings are good.
So he keeps saying that. So earnings are going to come down. And it's something that every major company has somewhat forecasted, yet their stock still goes up after they report earnings. To keep it very simple, that earnings must come down. The expectations of earnings must come down. Expectations year over year, even for this up and coming quarter and up and coming, 2023, expectation is still expected to be higher than where we're at right now. And he doesn't believe that. He thinks that is why companies like Google and Apple and Amazon are slowing down in the rate that, I'm sorry, not Google, but Apple and Amazon are slowing and or cutting their workforce and also working on staying more cash because they expect things to be choppy in the up and coming future. So that expectation of lower expectation for their up and coming quarters isn't something that he believes is factored in just yet.
But if you read through the comments, you're seeing things like in financials where they're taking more reserves, expecting that the consumer is going to be in trouble. All of that has to push the price down where we've got a real margin of safety where we could feel comfortable putting money back.
You know what I'm writing down as you're saying it's about the price? It's your guy, Mike Wilson, right, at Morgan Stanley, says the price is wrong. I think that's exactly what he says, right? The price is wrong has been the principal part of his argument as to why he's been negative the way he has.
No, I think he's right. I think the fact of the matter is, I think the market is too confident with regards to the fact that the Fed is pausing or that earnings are going to be better than they will be. And in reality is, if you look back at history, we're in a situation where the Fed has to continue to be aggressive and earnings have to come down, and that is going to push the market down. So from our standpoint, be cautious, build up
Beautiful.
cash, and wait for that opportunity to put the money to work.
Did you guys hear that? Stay patient, build up cash, meaning either reduce your position size or have cash on the sidelines, and get ready to build up your position. The reason that I like what it is that he said is because I think it's something that we all, even if you are bullish, right? I have a lot of my long-term plays on Tesla, Amazon, and Apple. It still kind of is a head scratcher, as in like, why are these companies, rising at the rate that they are, even when they forecasted not the best up and coming earnings, right? I mean, I feel like Amazon is a great example of this. Yeah, they might have beat expectation to some point, but if you actually look at their overall guidance, they also said that they're going to cut their workforce by 100,000. Like, how is that a positive notion? They said, I mean, if you actually think about that, there's nothing positive about that. Even during the FOMC meeting that just happened in July, Jerome Powell said that he would even consider raising interest rates more than the 0.75% that have already been set in place for the past 2 interest rate hikes. So there's nothing about less aggressive or things getting better or things not getting worse. We do not know if inflation has peaked. The Federal Reserve is ready to take a more aggressive approach. And why are companies reacting in a positive way? Not just a little bit, but 20 to 30% overreactions when the overall guidance is still super, super bearish. And this just makes me think of to be weary, right? And I think how he said it very elegantly in, be careful with the positions you choose to take. Be selective. You don't need to be scared, but just be selective. And there's nothing wrong with having cash available on the sidelines. So if an opportunity does present itself, you're simply able to take advantage of it. I wanted to share that with you guys. I wanted to get your guys' thoughts. Do you think that the market has overreacted based off of a recent FOMC meeting and recent earnings? Or do you think that this is something that is going to continue to rally and we're ready to make a full-on recovery? You guys can let me know down in the comment section. But overall, I just thought I would share that with you guys. I really do appreciate you guys' time. I hope that you guys enjoyed this video. Please consider dropping a thumbs up. Friendly reminder, I do trade live every morning with my Learn Plan Profit group. If you think that it would be of value for you, right? If you enjoyed this video and you think every morning right at market open, being able to watch me live would be of value for you, I would encourage you to take 2 minutes, click the second link in the description of this video and learn a little bit more about my Learn Plan Profit group and what we have to offer and what's included. If you have any questions about that or any questions even about this video, feel free to send me a message via Discord, and that's that first link in the description of this video. I really do appreciate you guys' time. Friendly reminder, if you guys want to pick up any merch, we have it all available at shoptechbuds.com or the fourth link down below. Appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.